Hey everyone, Couch Investor here with another video for you today. Today is going to be a bit different type of video. We're going to go over someone's portfolio. It's going to be Charlie Munger's portfolio. I've prepared a couple of videos already for the future videos. I'm going to cover Warren Buffett's portfolio, Jeff Bezos, Bill Gates, and another surprise one. They're going to come once every week or so, because in the meantime I will still be covering some stocks. But that's just to get some extra information for you guys, extra content out there. Again, my last videos was about hospitality stocks, so we talked about Marriott, Hyatt, and Hilton, and then Park Hotel and Resorts. If you haven't watched those videos, highly recommend you to watch it if you're interested in those type of stocks. We've also covered the day after the huge crash in the oil industry. We've covered ConocoPhillips, ExxonMobil, and Shell. And I always give my own opinion on all of these. And so again, if you haven't subscribed yet, please help me reach my goal of 200 subscribers by the end of next month. We're currently at 144, so we're moving quite fast, and I want to thank everyone that has been tuning in lately. It's been really a great pleasure, especially during these crazy times that we're in. Now, before we get started, just want to show you how the market is doing today. Well, today we finally have a red day. The Dow is down almost 5%, S&P 500 1.33%, the Nasdaq is down 0.80%. But as you can see, the Dow has been rising for the last five days. So obviously, eventually, the market does need to breathe a little bit. It's also unhealthy for the market to go back up that much, especially for example, I covered some cruise stocks, was 1 month ago or something. For those who have watched those videos and then have opened positions, well, you might be up, I think, 50 to almost 90%. I know I bought a Carnival stock. I'm at something like 93% gains. I sold yesterday a couple of shares to get some profits back and to have some cash. Well, because I was sure there would be some red days coming, so it's always good to have some cash at hand in case you want to do some extra buying when you see a good opportunity. That is, you don't have to buy always because it's a red day, but if you see a good opportunity, a stock you wanted to buy before but you didn't like the price, if the price has gone down now, well, good for you. You just got your stock for cheaper, and you've opened a position. Now let's get into Charlie Munger's portfolio. He even looks like a couch investor right here, so that's even better. So there are two types of portfolio that he managed, the family one and then his own personal one. It's very short portfolio. So his first stock that he manages in his family's portfolio is Costco. The price of the stock is at $304. He owns 180,000 shares. It's his favorite stock. Costco is the second largest retailer in America, in the world, sorry. And he really loved his stock. Here's one quote. It's one of the most admirable capitalistic institutions in the world, and its CEO, Jim Sinegal, is one of the most admirable retailers to ever live on this planet. He has lots of other quotes on Costco. He really loves and admires this company because they really try to, even when the company makes profit, reinvest in the company to make the products cheaper for its customer, so that the customer will eventually be happy and come back again, obviously. Then, not a really big surprise, Berkshire Hathaway. Obviously, there are two types. There's A and B. This is B because A is the one that costs almost $300,000, or maybe it's at $300,000 right now. So Berkshire is a conglomerate holding company. It owns company and has a stake in some others. So here you can see own company, as we all know, Geico, the insurance, Duracell, NetJets. What do we have here? That's mostly famous for everyone. Fruit of the Loom is the textile business. Many others, and then it has obviously significant stakes in Apple, Wells Fargo, Delta, Kraft Heinz, many others. That leads me to my next holding that he has is Himalaya Capital. It's an investment fund focused on Chinese stocks. So obviously he's heavily focused in the US, but he looked on the bigger picture and invested in China. Obviously, China is the second biggest economy in the world, and well, some analysts think it's going to be the biggest economy in the world in the years to come. He's invested almost approximately $400 million in this Himalaya Capital, and he calls the CEO of that company, Li Lu, that is, he's partly a Chinese Warren Buffett. So there's another reason why he invested in that hedge fund capital management, because most of you I think know that Charlie Munger is the partner in Berkshire Hathaway of Warren Buffett. So it makes sense that he trusts someone that he regards himself as the Chinese Warren Buffett to manage his Chinese investment stocks. Now, another one those last three were his family's portfolio, so only three stocks. Now, this is his own personal portfolio. It's Wells Fargo, obviously also a big holding in Berkshire Hathaway. So now the price is at 29.20 cents. He has 1.6 million shares. It's at 51.6% of its whole portfolio. Wells Fargo is the biggest bank in the world, fourth biggest bank in the world. The banking industry has been a gold mine. This is a quote from Munger. I think Warren and I blew it. We should have invested a lot more in banks. That was way before in the beginning. That is because banks were making a lot of money until 2008, and obviously now with the whole problem and everything. So he regrets not investing more into banks, or maybe, I don't know, partnering up with one. Then obviously more banks, Bank of America and US Bancorp. These are cheap stocks. He calls Bank of America is 43.1% of his portfolio. So as you can see, Bank of America, Wells Fargo, and now US Bancorp are largely the three holdings, the biggest holdings in his portfolio, and it's mostly almost his whole portfolio. Again, same thing. He loves banks. He wishes he had more, invested more in them, but for him, he calls them cheap stocks and good stocks to own. Now, lastly, is just 0.3%. It's called POSCO. It's just a Korean steel company. He already sold most of his holdings of the company. He just holds a little bit right there. But before I'll end this, because it'll be a short video, I'll end with this quote: "The idea of excessive diversification is madness. The whole secret of investment is to find places where it's safe and wise to non-diversify. It's just that simple. Diversification is for the know-nothing investor. It's not for the professional." So let me elaborate on this, because I think that's a common misconception for a lot of investors out there. A lot of people think, oh, look, I like this company, I like this company, I like this company. Let's say like Apple, McDonald's, Facebook, Tesla, Square, Delta, Boeing, Starbucks, Nike, whatever. You can name hundreds of them. That does not mean you have to invest in all of them. As you can see here, Charlie Munger, one of the greatest investors of all times, only has 3 stocks in his portfolio. So that just tells you, and he has done pretty well, as you can see. That just tells you need to find good stocks to invest with, not a lot of okay stocks that you want to own. I've made this mistake in the beginning. In the beginning, my portfolio was almost at, I don't know, 30 stocks or so. Don't get me wrong, you can still make money with that, but it's very hard to follow 30 stocks very well. So I've kind of sold a couple of stocks here and there. Obviously, sometimes I refused to sell because I was in a losing position. Same thing now in this scenario. I'm holding Citibank. I'm holding Ford, Canopy Growth, and Abercrombie and Fitch. Those are 4 positions that I want to sell, but the only reason I'm not selling right now is because, well, they got hit very hard by this crisis, and it makes no sense for me to sell it right now because I know that in a year or so they will go back up, and then I will sell, and then my portfolio will be reduced by 4 stocks, and I will have less diversification. My portfolio is still bigger than obviously Charlie Munger. I am at 20 stocks right now, but slowly but surely I'm trying to take it down to 10 to 15 stocks. That would be a great goal. 10 to 15 stocks, I think I can still manage to follow most of them because a lot of them are very similar. High-tech stocks, consumer staples, and then I have a couple in the transportation business, so cruises, airlines, and whatever. So it's really a couple of categories. You need to make your portfolio as small as possible so you can follow and have, well, good investments in the long term, obviously, but don't overdo it. That will be it for this type of video. So like I said, in my next video, it will be or about Bill Gates' portfolio, or Buffett's, or Bezos, and the last one will be, I think, for at the end of next month. But I have a couple of other nice little surprises that I will be covering. I will be covering the 5 best Chinese stocks to go forward. I will be covering Virgin Galactic, a lot of other, also ARK Invest. I know a lot of people like to hear about innovative stocks, so I think ARK Investments ETFs can really be helpful for a lot of you guys, so I will cover that as well. And yeah, that will be it for today's video. Again, if you like the content, if you like the videos, please leave it a like and subscribe. If you have questions or remarks, put it down in comments below. I'm very open to discussions. And that will be it. See you all in the next video. Bye bye. Take care.